Good afternoon. Good afternoon, everybody. I hope you can see the slides. Hope you can hear my voice if you're joining us for the live session, or if you're on the live stream. You're all very welcome. Welcome to Paul's Monday Market Update number 218 for Monday, 16th of March, 2026. I hope you're all well. Hope you're all safe wherever you're in the world you're joining us from, and I hope you've had a good weekend and ready for what is going to be another eventful week in an eventful month in an eventful quarter in an eventful year. For those of you joining us for the first time, Paul's Monday Market Update is just that. It is me flying through as much as I can share with you over the next 25-30 minutes, looking at strength and weakness within the FX markets, looking at some charts of interest you might want to add to your watch list, and then having a look at the live markets. It is not a signal service, it's not trade recommendations, it's just me sharing with you what I'm looking at, which might be of relevance and interest to yourselves. As always, you are very welcome here, but just remember that you are always responsible for your own trading decisions. As always, if you want a little bit more help and support on your trading journey, there is the VTP Trader Accountability Group. Doesn't matter what you trade or how you trade, it's all about building discipline, accountability, and consistency in a small group. You can ping me for if you've got any points, or use that QR code there to take you to the page to join. Next, XLF, which is the ETF for the financial sector. So we've looked at Wells Fargo, we've looked at NatWest. Now, admittedly, XLF, looks primarily focuses on large US banks and kind of large US financial firms. People would see it as a bit of a bit of a macro trade on the health of the overall financial system, and elements of it are kind of linked to sort of yield curve dynamics and recession risks. So anything where there's talk about rising rates, anything that perhaps might be about steepening curves would support financials. But if you've looked at any of those kind of major US financials over the last couple of weeks, they've not been doing terribly well. Certainly, once again, this had been in a good, strong trend, but we had already kind of topped out going into the start of the new year. We then invariably, got beneath the close beneath the weekly 50, and we have continued, and now we're sub $50 as well. Okay, so now an element of that would be, a case of overall risk sentiment. A case of that overall, as I said, just an element of that private credit issues that have sort of not really sort of captured the sort of main news themes, precisely because everybody's focused on the sort of kind of bigger issues of the war in Iran. But certainly, okay, now that we're sub 50, I'm kind of curious to see, well, hang on a minute. Does 50 now sort of turn from being support into being resistance? And is that an indication of overall sort of views of a recession risk and kind of the US economy in general? So it has certainly worked its way down there. And as I said, I'll be watching 50 now as a kind of as a level on that.